It's Conduit News Radio with Paul Harrell.
Hey, folks, it's been a little while since we talked to Dr. Michael Busler, but let's check in with him. Michael Busler, how are you this morning, sir?
I'm doing real well, Paul. How are you? It's my pleasure to be here.
I'm doing good. Did you have a good Thanksgiving, sir?
We certainly did. Family was here, and everything went well. As usual, I ate a little too much and suffered for it the next day.
Yeah, me too. I definitely am doing that as well. Hey, well, let's talk a little bit about what we've seen in recent weeks. A lot of people are hesitant to talk about positives in the economy in the mainstream press, but they will certainly tell you about the negatives. This Wall Street Journal article, stocks skid as major indexes shed 2018 gains. What's your reaction to all this as a, as an economist and as a, public policy analyst, sir?
Yeah, I think maybe investors overreacted a little bit. There are a number of things that would cause stock market investors to pull back a little bit. Interest rates are going up. The Fed's raised them 7 times in the last 2 years. They're likely to raise them again in December, although I think they're going to be a little less aggressive next year. But higher interest rates mean that investors are more attracted to bonds rather than stocks, so that tends to hurt stocks a little bit. The problem with the trade war is making a lot of investors nervous, and they're afraid that's going to hurt corporate profits next year. And if corporate profits go down, of course, stock prices, earnings go down, and then stock prices go down. And some economists are starting to talk about a recession coming up soon. And when investors start to believe in that too, then they're going to pull back. Frankly, I think, and it's not unusual to see a year-end rally in the stock market, and I have a feeling we may see that in December. That is, stock prices go up significantly. They're based on earnings. Stock prices are really stocks are a little bit undervalued based on earnings. So I would think that a rally at the end of the year is certainly possible. The other thing is the Christmas buying season is going to be exceptionally well. Cyber Monday, they sold almost $8 billion worth of goods. Now, last year it was just under $7 billion, so that's a pretty big increase, for just 1 year. Typically, sales the last few years around Christmas in the bricks and mortar stores, typically they're up about 3 or 4%. This year, they're looking to be up in the 5 to 6% range. This is the first year, I think, probably in 10 years, that I've advised the small business people that I deal with to make sure you have enough inventory. The last 10 years, really, I've been saying to them, watch your inventory levels. You don't want to get stuck with too much inventory. This year is the first time it's the opposite. I'm saying to them, make sure you have plenty of inventory because I think sales are going to be very strong.
Wow. That is certainly not what you hear. A lot of times you hear, the brick and mortar businesses, give us an internet sales tax now for fairness. But you're saying it may be working out pretty good for brick and mortars this year.
Yeah, certainly much better than it has in the past. Look, there's no doubt the trend into the future, especially with the millennials now becoming into mainstream. The trend in the future is a lot of online buying, particularly for routine kind of items, things you buy all the time. It just makes it so much easier to buy things online. You don't have to drive out and get them somewhere. You don't have to go into the store, et cetera. They're just, I know there's some of the things I get routinely, like dog food. I have 2 dogs, so I buy the big bag of dog food. Well, typically I've got to drive to the store to get it, haul it home, carry it around. Now I just go online. I order it. It's actually a couple dollars cheaper online than at the store. And, 2 days later, it's sitting on my front doorstep, and it certainly makes it a lot easier for me. So online buying will continue, and the bricks and mortar stores in the longer term are going to have to deal with this. Shopping malls are trying to deal with this now, too. But still, this year is going to be a good year for everybody with regard to Christmas sales.
Yeah, that's good. And, and it very much, to me, the internet situation is very much a free market issue. I mean, let the market do what it's going to do. I think brick-and-mortar stores, I think some of them will go away, but I think the ones that sell products that people are always going to want to touch and feel before they buy, I think those are going to be fine. What are your thoughts?
Yeah, same thing. I mean, for routine products, as I said, that you don't have to look at because it's exactly the same as it was last time, those kind of products will do well online. But there are things that, people want to touch them and, as you say, touch them and feel them, see how they work. And there's some things you just want that day. So there will always be a need, I think, for brick and mortar stores, but the mix between brick and mortar and online will be changing in favor of online, and bricks and mortar type stores will start offering perhaps some unique products. The other thing that they can offer is they can give you service. So if there's something wrong with the product, they can fix it right there. If you need some explanation as to how things work, then the salespeople can help you there. So there isn't a need for it. We're just going to have a little different balance going forward into the future.
Yeah. We're talking with Dr. Michael Busler, public policy analyst, professor of economics at Stockton University. Talk a little bit about the news. I'm sure you were following it with General Motors. I was listening to a press conference, the White House press conference yesterday with economic advisor Larry Kudlow, and he seemed to think that, it's awful. The idea to getting laid off, terrible, bad. But as far as, major economic impacts, he doesn't think it's going to affect the economy's numbers at all. What are your thoughts?
Yeah, I would agree with him. So there's a couple things happening here. One, during the last recession, it hit the automobile industry hard, and two major auto manufacturers, GM and Chrysler, ended up going bankrupt. Now, the government bailed both of them out. Chrysler is actually now owned by Fiat. Fiat ended up with 53% of Chrysler stock, so they control that company. GM was given over $50 billion. They paid most of it back through giving some stock to the government. The government sold it. But the point is the government kept two firms in business that the marketplace really voted out of business. Had the government not interfered, most likely what would have happened, a group of business people would have raised capital. They would have bought the profitable parts of the auto companies and started over again, or perhaps the companies would have been absorbed by another auto manufacturer. So instead, the government kept them in business. I said at the time, I didn't think General Motors was going to make it in the long run. Now, they still may make it in the long run, but they're still dealing with the fact that government lent the money to stay in business, and that's coming back somewhat to haunt them. The other thing that's hurting them is they were a little slow to react to changing market demands. Historically, about 50% of their production was in cars, and the other 50% in SUVs, crossovers, pickup trucks, those kind of things, which are high profit items. Cars are relatively low profit. The marketplace is changing, and last year, of the total sales, only 30% were in cars and 70% were in the SUVs, crossovers, and trucks. Now, Ford Motor Company and Chrysler recognize this, and they're essentially stopping to make cars. Ford will keep making, I think, the Mustang and one other model. Chrysler is pretty much getting out of the car manufacturing business, both of them concentrating on just the SUV crossover. So General Motors was a little slow to react to that, so now they're closing plants that just make cars. I think what's going to happen, some of those plants will probably get retrofitted and start making SUVs, et cetera. But for the short term, they're going to have to close some of the plants because they simply weren't fast enough to realize some of the trends in consumer buying. Now, the president's a little upset with them because the government did bail them out. And when the government bails out, of course, the government doesn't have any money. All they have is what they take from the taxpayers. So taxpayers, American citizens, bailed out General Motors, and now General Motors is closing plants and laying off 15,000 Americans. The other thing is the federal government gives subsidies to General Motors to help promote development of electric cars. Now Trump is threatening to, I don't know whether he can, but he is threatening to try to hold back on some of that. So General Motors has got some strategic decisions to make in the near future, considering the market's change, the government's on them, et cetera.
And I know, Larry Kudlow yesterday, he did kind of hold out some hope that some of those jobs would be relocated to Texas, so maybe it wouldn't be a total loss, but we're not really sure about that. I mean, we don't know. But you do think, let me here's an example, and I know I'm on CNN, but here's their headline: 3 lights blinking red in the U.S. economy. And they talk about, things like risky corporate borrowing, the return of buying more house than you can afford, stuff like that. I mean, do you share those concerns, or do you think this is all just kind of people hoping the economy crashes so they can blame it on the president? I mean, that's what I think is happening.
Yeah, it's probably a little bit of both. There are some signs. The home building, because interest rates have gone up, and when interest rates go up, it's more expensive to buy houses. So housing sales have been going down. Car sales have been going down, although the total vehicle sales aren't doing badly, but the car portion of them are going down. And interest rates are rising, which, again, tends to slow economic activity. So oftentimes when those things happen, they say, look, that's the beginning, especially with the stock market declining. That's signs that a recession is coming. The other things they cite is the business cycle. I mean, historically, you have a recession every, 7, 8, 10 years. We had one in 81, 91, 2001, 2008. And they're saying, look, it's been 10 years since the last recession started, so another one could be coming. Now, personally, I don't agree with any of those. The market for houses and cars and things has slowed down a little bit. But that's mostly as a result of interest rates going up. The housing market rather, is still at a fairly good level. It's not at a depressed kind of level. And with regard to the business cycle, the way the business cycle is supposed to work is you have a recession, you spend a year or two in recovery, and then you go into a 5, 6, 7, 8 year expansion. Because the prior administration did not concentrate on economic growth, but rather concentrated on curing perceived social injustices. It's injustice everybody doesn't have health care. It's injustice CEOs make so much money. It's an injustice that big banks take advantage of consumers. So because the prior administration concentrated on curing these perceived social injustices, it ended up slowing economic growth. In fact, President Obama is the only president in history to serve a term in office without having at least 1 year where annual GDP grew at least 3%.
Wow.
In fact, we haven't had a 3% growth since 2005. Now, we will have more than a 3% growth this year, although the fourth quarter is a little slower probably than the second or third, but we will have better economic growth. So as a result of President Obama passing all those regulations to help, he said, to help consumers and slowing economic growth, we never really got out of the recovery stage.
Yeah. Mm-hmm.
Finally, we're into an expansion because regulations have been reduced, taxes have been cut, so we're finally into an expansion. I think the expansion will continue at least for the next 3 or 4 years. Recall, too, that President Trump modeled his tax cut after what Reagan did in 1981, went into effect in 82. by 1984, the economy grew at a 7.5% annual rate.
Wow.
I don't know whether we'll see that kind of growth, but I think we're still in store for at least 3, 4, 5 years of good, solid economic growth.
Let me ask you this. Last question. On the China tariffs, the president's saying he's open, and hopefully maybe China will be on board, but they're going to have to concede. Our economy is doing better. We are growing. China's economy not so hot, right? So do you think the goal here is just like, hey, we can just outlast you. We're the greatest market in the world. Everybody wants to be in this market, and if we have to, we'll just keep raising the tariffs until China comes to the table. What are your thoughts?
Yeah. So when President Trump got into office, he took a look at every trade agreement the U.S. had. Every single one of them was slanted in favor of our trading partner and to the detriment of the U.S. For instance, with the European Union, they make a car and sell it in the U.S., we charge a 2.5% tariff. We make a car here, sell in Europe, they charge us a 10% tariff. China charges a 25% tariff. So President Trump said, now remember, he's not a politician, he's a business person. A politician would convene a summit, we'd meet again next year, we'd talk with Congress, we'd meet the following year, and then you kick the can down the road. A business person has to confront a problem immediately, especially if it's affecting your bottom line. So President Trump said, I want everybody to come to the bargaining table and renegotiate these trade deals. Well, they were reluctant to do so because everyone's in their favor. So again, what does a business person do when you have a reluctant trading partner? You create a sense of urgency. By putting on these tariffs, he created a sense of urgency. Mexico and Canada have agreed to something. South Korea has already agreed. Japan is on the verge of agreeing. The European Union says they'll work towards a no-tariff policy, which is what the ultimate goal is. Now he's putting the pressure on China. China needs us much more than we need them. And when Trump placed the tariffs, he placed them on intermediate goods, steel and aluminum so far. Now, if steel, he put a 25% tariff, but if you look at a car, it's only 10% steel, so the effect on the price of a car is relatively small. So we can ride this out, and there is some short-term problems, particularly with some of our farm agricultural industry. We can ride this out. They need us more than we need them. When they put tariffs on China, they put tariffs on finished goods. So that gets passed right on to their consumer, and their consumers are hurting. And as you say, their economy, they still have good growth, but historically it's much lower than it has been. I think China will come to the table, and I said this back in February, I think China will come to the negotiating table before the end of the year, and by early next year we'll have an agreement with them. It takes time to ratify all these things, but we'll have an agreement with them that will open up foreign markets to U.S. manufacturers, which will lead to long-term economic growth for us. There will be some short-term pain that we'll deal with, but long-term this is good.
And the things that they're asking for are very specific. You know this, Dr. Busler. I mean, hey, quit the forced technology transfers. You're going to have to stop those things. And I mean, I think this. I hope you're right. I think there could be a future, with the trade with China, but it's just going to have to be based on mutual respect, and they're going to have to stop stealing all of our stuff.
That's exactly right. We all favor free trade, but as President Trump has emphasized, it's got to be fair. So free trade, if you're going to have any tariffs at all, then it should be the same on both sides. And China can't put requirements on us to give them all of our proprietary knowledge just to be able to deal with them. Every other president has recognized this and did nothing about it. President Trump, a business person, is confronting the problem head on.
Dr. Michael Busler, we really appreciate it, sir. It's always great to have you on the program.
Thank you. It was my pleasure.
All righty, folks. We're going to take a break. 870-275-9799. You